Hello there, welcome to David's Investment Analysis channel. And today we're going to be talking about the stock Aritzia. First, I'll briefly talk about the company, what they do, and how they make their earnings and revenue. Secondly, I'll follow up with a quantitative and a qualitative discussion about the aspects of the business. I'll then conclude on what I suggest whether the stock is a buy, hold, or a sell, and whether I own any position of the business myself. If you haven't yet, please like, share, and subscribe, and click the notification bell. If there's any other company you'd like me to cover, please leave a comment below. Aritzia Inc. is a vertically integrated design house of fashion brands. The company designs apparel and accessories of its collection of exclusive brands and sells them online and in their boutique stores. As of December 1st, 2019, they have a total of 94 retail boutiques, of which 67 in Canada and 27 in the US. Some of Aritzia's primary in-house brands include Wilfred, TNA, Babaton, and Community, to just name a few. Their stores also carry clothing of labels of Citizens of Humanity, Macaj, 611, and New Balance, just to name a few as well. In short, what they do is they sell a wide range of apparel brands through its in-stores and online to generate their sales and earnings. Now let's look at quantitatively. One of the first things I generally look at is the revenue. As you can see here, they've been growing at 10 to 23% annually between 2014 and 2019, which is really good growth for a retail fashion. And their earnings per share has also been growing between 2015 and 2019, with the exception of 2017, of which we'll dive in a little bit later. The free cash flow, which is the cash flow from operations less any capital investments, has also been positive every year between 2014 and 2019. Shares outstanding increased in 2018 and 2019 due to issuance of shares, but the company has been repurchasing their shares in fiscal 2020 year, decreasing the outstanding number of shares. Repurchasing shares generally means that management feels that the company's stock is undervalued, and it's a way to boost its EPS, earnings per share. As you can see here, some of the metrics on their annual report, they have continued growing net revenues, adjusted EBITDA, and adjusted net income every year for the last 4 years. When we look into why 2017 earnings were negative, we find that the stock-based compensation expense in 2017 was $103 million versus compared to $11 million in 2016. This is approximately 10 times the amount. It appears that the increase was largely due to the IPO and should be considered a non-recurring expense. If we assume that 2017 stock-based compensation is $13 million, which is a 25% increase from 2016, which is aligned with the increase in their sales, we would have an adjusted EPS of approximately 33 cents per share, suggesting that the EPS would have been growing every year since 2015. Now looking at the balance sheet, a few items to note. You can see that cash approximately $95 million. Inventory is approximately $122 million. ROU asset and liability nets to an amount of $128 million liability, and long-term debt is approximately $75 million. Inventory management is particularly important for retailers because if inventory doesn't get sold quick enough, they'll likely have to mark down the prices to attract customers. The days in inventory for Aritzia ranges between 62 and 96 for the last 5 years, and inventory turnover is between 4 and 6, and we'll compare these later with their competitors. The ROU asset and liability. IFRS 16 is a new accounting standard required that the lease assets and liabilities would be reported on a gross basis. The company's financial reports are impacted by IFRS 16. Certain lease-related expenses previously recorded as occupancy expense are now recorded as depreciation expense for the right-of-use assets and interest expense for the related lease liabilities. Now let's look at their long-term debt now. Long-term debt is approximately $75 million, which isn't due until March 22nd, 2022, which is 2 years from now approximately. They also have $96 million of cash, as we discussed earlier, which they could use to pay back the loan. So on a net basis, they would be cash positive. And they also do have a revolving credit facility, letters of credit, totaling $175 million. This suggests that the company is well financed and is not in any liquidity issues. Now, looking at its current valuation and comparing it to the historical average, we can see that today's value is the cheapest it's ever been in terms of price to sales, price to earnings ratio, price to cash flow ratio, and the price to book ratio. The higher price to forward earnings ratio is likely a result of lower earnings expected in 2021 due to the global health issue. Beyond that, I expect that the company will continue to grow. Now let's look at the valuation compared to its competitors and peers. The red highlighted cells means that they are below the group's average, and the green highlighted cells means that they are above group's average. When compared to its competitors, Lululemon, Canada Goose, Roots, Ralph Lauren, Aritzia has a very good valuation with a PEG ratio of 1.49. They also have the best days in inventory and inventory turnover ratio, meaning that they manage their inventories very, very well. Although their profit margin is below the group, their operating margin, return on asset, and return on equity is above the group average. Now looking at the stock chart for the last 2 years, Aritzia has performed better than Canada Goose, Ralph Lauren, and Roots Corporation, but is lagging behind Lululemon significantly. As you saw earlier, the valuation of Lululemon is significantly higher than that of Aritzia. For that reason, I do see an opportunity for Aritzia to catch up. Now some qualitative aspects. Very interestingly, Aritzia has never closed any of their boutique stores in 35 years of business. This is amazing. They ensure that they find the perfect location with foot traffic and strategically positioning their stores with merchandises. And they had 21 consecutive quarters of positive same-store sales. These numbers are amazing numbers for a fashion retailer. Now let's look at their CEO, Brian Hill, who is also the founder of the company in 1984. Seeing how they have been growing their revenues, growing their earnings every year, and never had a single boutique close, these are amazing numbers and amazing ability. He must be doing something right, and I would continue to trust in him to lead this company. There are a lot of opportunities to grow within the US and Canada, and Aritzia was planning to open more stores in Q4 fiscal 2020. However, this may have been impacted by the global health issue. This is something that I'll definitely look into when they report their earnings on May 28th. The company has an amazing e-commerce business and has been performing very, very, very well the last few years. They have one of the best in the industry. They have continued to invest heavily into the e-commerce business, and previously they mentioned that they're working with SAP to develop a comprehensive customer program used to personalize and improve client engagement, such as using algorithms based on the client's review and click and to provide suggestions to increase client engagement. Aritzia has also adopted a new way of marketing, using social media influencers and celebrities to build upon the brand. And using influence is a more affordable way of advertising than the traditional celebrity endorsement. So this is a very unique way to reach out to many, many individuals and to connect with them at a personal level. Fun fact, Meghan Markle has been spotted several times styling Aritzia's dresses and was mentioned that Aritzia is one of her to-go-to brands. Aritzia has a well-respected loyalty and rewards program that keeps customers coming back, and I've been to several of their locations in the Greater Toronto area, and they're always busy. They are vertically integrated, meaning that they are the supplier and manufacturer of their own brands. This should offer lower costs, higher quality, and personalized products. And because they have several brands, they can adjust and position those brands as appropriate, such as advertising and pushing forward those brands that are doing well and scaling back on the ones that aren't. And this is a great ability to have. With the several brands that they have, they address ladies at all ages from kids to adults, and a wide range of styles, including casual, athletic, business, and formal attire. Aritzia has a great reputation. They recently started the Aritzia Community Care Program, a $20 million effort to donate clothing to as many as 170,000 healthcare workers in Canada and the US. However, the global health issue has impacted their business, as all the retail locations has been closed since March 16, 2020. However, now, 2 months after, they are slowly starting to open, but yet carefully as well. Not only Aritzia will be impacted by the closure of their stores, there are questions about whether they would be impacted by the supply chain. Would they be able to continue to manufacture their apparel, or would there be operation disruptions in their business? There's always been an argument about fashion brands can change very quickly. They come and go. As you can see, Forever 21 filed bankruptcy recently, and they were they were growing very fast at one point in the previous time. And it'd be interesting to see if Aritzia can continue to grow and build their brand. Now my conclusion. In my opinion, I believe that the stock at current price is a buy. However, I do want to highlight that there is a lot of uncertainty within the industry because of the global health issue. And Aritzia has a lot of their stores within malls, and I believe there will be a shift in terms of how people will shop in the future. When malls are finally open, I do foresee that the traffic in malls will be reduced significantly. But I do see Aritzia will be one of the stronger players coming out of the global health issue because they have a strong e-commerce platform that they have invested for many years, and they also have a very effective way of marketing using both influencers and celebrities. They also have a vertically integrated with several amazing brands for all age groups. Even though these are pre-global crisis numbers we looked at, they have a strong growth rate and the same-store sales, very good valuation and inventory management, and have very little debt and an amazing balance sheet. And these are the type of business I like to be invested in. All analysts suggested that the stock is a strong buy or a buy with a target price of $20.56. That's approximately 23% upside. Aritzia will be reporting the Q4 fiscal 2020 results this coming May 28th. As you can see here, these are the analyst expectations. 21 cents per share in Q4 and 87 cents per share for the fiscal 2020 year. You can also see the expected Q1 2021 earnings is a loss of 11 cents per share. As you can see here, Aritzia has been able to beat their earnings estimate for the last 4 quarters, and 21 cents per share estimate would be the same as prior year. Since they've been able to grow consistently in their earnings in the last few years, I would expect that they would be able to beat their Q4 earnings that is prior to the closing of their stores in March. I also believe that they would have positive news because of their strong e-commerce platform. Now let's look at what happened to the Aritzia stock when they reported their earnings in the last 4 quarters. Q4 fiscal 19 and Q1 fiscal 20, the stocks traded lower after their earnings report. Meanwhile, Q2 and Q3 of fiscal 2020, the stock traded up after their earnings report. It would be very interesting to see where it would trade post Q4 fiscal 2020 results. I think because the stock has been hit so hard because of the global health issue, the stock may go up after the Q4 fiscal 2020 earnings. But what I think the most important is their outlook for the remaining fiscal 2021 earnings. And I think that will dictate whether the stock would go up or down. And it'd be very interesting to see how management would discuss about their outlook for fiscal 2021 year. Disclosure. I do own a little bit of Aritzia, and it's about 2% of my portfolio. I do intend on adding to this position. However, I would likely wait until after the earnings report on May 28, 2020, where they can provide me more clarity and what they're expecting an outlook for fiscal 2021 year. And that's it for now. If you would like me to do a follow-up video on the Q4 earnings of Aritzia, please comment below. If you haven't done so, please like, share, and subscribe. The next video I'm going to be working on is related to the most recent purchase I made. If you'd like a notification for that, please click on that bell notification after subscribing. Thank you for watching. See you then.